Ladies and gentlemen, welcome back to the channel. Sofi stock closed the day up 3.39%. And I bet you guys are wondering why Sofi did not hold up that 18% gain that we did see last night off of the earnings report as well as the earnings call. Rest assured, I think this is only the start of a rally for Sofi stock, but there is some weird dynamics that are going on in the markets specifically today that I do want to go over with you guys. We also seen a lot of very bullish talk from Fed Jerome Powell today. He also talks tomorrow, and there is some more data coming out tomorrow as well that we need to talk about here in this video and much more. So rest assured, we will keep you guys up to date on anything and everything that is going on for Sofi stock as well as the broad markets, even bring you guys some trades every now and again that I am personally making. So if you guys want to stay up to date with all of that information, hit the like button, number one, subscribe to the channel, number two, and let me know down below in the comment section, are you bullish after Sofi earnings? It does seem to me like Sofi beat a lot of analysts' expectations, so nevertheless a great thing. But get yourself some free stock down below in the description of this video with Weeble, Moomoo, and Public. Thank you guys for doing that, and without any further ado, let's get into it. So like I said, Sofi was up about 3.39% today. We were up as high as about $13 per share. And a lot of people are probably wondering, like, what happened today? Why did we pretty much sell off throughout the whole entire day? That's a fair question, but you really have to know what is going on behind this move. And before we get into that, let's first off acknowledge the fact that institutional investors are still buying Sofi. For the institutional option flow, 28 orders came through as interesting flow sentiment, $8.42 million worth with a positive order value of 60%. So certainly, institutions are very bullish on Sofi stock, and that is even more bullish than we seen yesterday, and that was at 53%, and over the past week averaged at about 57%. So institutions are still very bullish on Sofi stock. That is not the reason why Sofi dropped today. But we do need to go over exactly what earnings are, or what they were, I should say, and then get into what happened today. This article says Sofi's revenue forecast surprised investors. The stock took off. Sofi Technology stock surged as investors welcomed an upbeat forecast from the financial services company. For the first quarter of 2022, Sofi expects to generate between 280 to 285 million in revenue, up 30 to 32% year over year. While the consensus call on Wall Street was for revenue of 297 million. First quarter revenue would be higher had the federal government not extended its moratorium on federal student loan payments to May 1st. The company said as it reported its earnings on Tuesday. The company expects the negative impact of the moratorium to be between 30 to 35 million in revenue. So if that was not the case, Sofi would have made much more than 297 million. Well, that's the estimate, but they would be guiding a lot higher, over 300 million. If that was not the case. But really, the exciting thing about Sofi was actually this down here. But we'll read all of this because it is very important for you guys to know. It says Wall Street is optimistic that Sofi can deliver better results throughout the rest of the year. Management expects adjusted revenue will grow 55% in 2022 to 1.57 billion, with adjusted earnings before interest, taxes, depreciation, and amortization of 180 million. The consensus call among analysts surveyed by FactSet was for annual revenue of 1.49 billion. So that's about $100 million more expected revenue throughout 2022 than analysts had projected. It says the company expects student loan refinancing volumes will rise after the moratorium expires. It also believes that Sofi Bank, which it began operating in February, will contribute more meaningfully starting in the second quarter. And that's something that I am also very bullish about, that I don't think a lot of analysts have actually priced in. The fact that their largest business, their most consistent business, their legacy business, refinancing student loans, has pretty much been non-existent to a certain extent over the past 2 years, and I don't think people fully price in what that can do for SoFi once you have to start paying your student loan repayments. Obviously, a lot of these student loans might be older when the interest rates were actually a lot higher. I know my mom personally, she went to college in 2008, 2010-ish time frame, and the federal funds rate was 5%. So I can only imagine what the interest rate was for those loans back then and what you could refinance down to now. So I don't think people fully price in, and people, I mean investors, that when you're hit with $1,000 student loan payment or whatever the number is, not as sure, 500, 1,000, whatever that number is, if you could say, hey, if I refinance, spend a little bit of money, I'll only have to pay $250 a month or $300 a month. I think a lot of people are going to jump on that, and I think SoFi is going to be a main beneficiary of that because their seamless process to refinance is unmatchable. It does also go on to say, for the fourth quarter of 2021, SoFi reported a loss of 15 cents a share, beating estimates for a 16-cent loss. Adjusted revenue was $286 million, above management's guidance and street consensus forecast. The bank added 523,000 new members in the fourth quarter, ending the year with approximately 3.5 million total, up 87% from the start of the year, said CEO Anthony Noto. And that is why the stock really did rally, because they added over 500,000 new members in the fourth quarter alone. Now, I can only imagine what it's going to be in the first quarter of 2022 as far as this is concerned, because they got so much attention and so much press throughout the Super Bowl. So I do think that's another reason why the stock is likely to rally in Q1 2022. But an 87% growth rate is a company that is gaining a lot of traction, and the hardest part about growing a company is to get the ball rolling, to get that traction going. Because if you refinance something or get a loan for something or start trading with SoFi, then the word gets around, people start to know about it. Think about this like Tesla. Tesla's never spent $1 on advertisements, but word got around. Now everybody knows what Tesla is. There's a main figure there, and I do think SoFi is in that direction. They're on the right street. So looking good right there. Earnings, great. But why did the stock actually sell off today? I think there was a bit of shorting, and you do have that mentality of sell the rips. Now, from my indications, you're not seeing a lot of people actually did sell today. I think it was more or less the trading algorithms that would not hold the stock up, because you guys got to remember, market makers account for about 70% of trading volume, and when there's nobody willing to buy or sell the stock, the market makers will come in and provide that liquidity, but sometimes they will provide too much. And we can get into that if you guys want to in another video. But I think sometimes they deliberately move stocks one way or the other. So imagine this. If there is 1 million retail investors trying to buy one share piece of SoFi, that is 1 million shares. If there's not enough, shares being sold equal to 1 million shares, theoretically, you would not be able to buy that stock. So what does the market maker do? They come in and basically short the stock and make sure that you can essentially buy stock by selling it to you. And when they do that too much, when they drive down the price, then that's when you see the price of the stock going down, even after a stellar earnings. And this was not only just the case for SoFi, it was the case for a lot of stocks today. My portfolio was down 4%, Lucid down 2.44%, Affirm down 2%, PayPal down 0.5%, Mullen Automotives, I still have a big gain on that one, but that was down 6% today, Square 2.5%, DraftKings 2%. Snapchat almost 2%. So it's a lot of those higher growth companies that are really getting beaten down today, unjustifiably, in my personal opinion. You had Fed Jerome Powell come out and say, literally, this is one of the main articles on CNBC, that Fed Chair Powell notes highly uncertain Ukraine impact, but says rate hikes are still coming. Now, I watch all of this. I watched this whole thing today. Very boring. It's 2-3 hours long. It was very long. And essentially what he said was, yes, we are still going to do the 0.25% rate hike in March 16th, But after that, we're not really setting anything in stone as far as what we are going to do, what our course of action is going to be to fight inflation, that they're pretty much going to wait and see what happens and what kind of effects come about because of all of these Russian sanctions. So it was actually a very dovish tone, because if we were going to see a 0.5% rate hike, you would have seen that verbiage come out of Powell's mouth today, and you did not see that happen. So you should have seen a lot of these higher growth stocks actually rally today, but you did not. You've seen the bigger names. You've seen the Apples, the Microsofts of the world that really control the markets. They were the ones that rallied, and that's why the markets looked like they were up so much, which technically the indexes were up a lot. But behind the surface, it's the bigger names that control the markets that are actually rallying for the most part. So that is why SoFi stock did not hold that 18% gain we seen last night in after hours. But when it comes down to it, you're going to see these rotations in and out of different parts of the market. And historically, what we've seen over the past couple of months, if a stock has good earnings, they tend to actually hold up very well. Like we could see with Square. Square had great earnings. The stock has held up very well. You see, we hit that low at 88 bucks, rallied up after earnings to 127, and we're still at 123 right now. So, you know, we are likely to continue to rally with SoFi stock once that money starts to go back into a lot of these higher growth sectors. And I think that will happen very quick because, like I said, institutional investors, they did buy a lot of bullish call options today. 1750 calls, 1250 calls, $10 calls, $10, $10, $20 calls right there. So the situation looking very bullish, but you did see a lot of large put positions being placed as well. Here's a $20 put for $2.64 million worth. That is a whale trying to suppress the price of the stock using options. So a lot to take in right there. Rewind if you didn't catch something, if you want to hear it again, but nevertheless, you are seeing some very interesting things. Even on the Ortex data right here, borrow change of 11.96 million shares. That means 11.96 million shares were net sold short today. So borrowed shares, 13.2 million shares that were sold short, 1.24 million shares that were returned for the day, bringing our short interest to 18.25%. Current shares that are sold short of about 116.74 million shares. Cost to borrow max of 4.72%, and you are seeing the utilization is at 100%. So we're seeing the cost to borrow max that did go up about 2.5%. And that's at about almost 5%. So if you're an institution, you can almost get 5% for lending out your stock. But you see right here, the utilization is at 100. So nobody wants to lend out their stock for 5%. That is also a very bullish sign, because if they didn't think the stock was going to go up 5% here in the near term future, they would take that 5% free money essentially and lend out their stock. So I think that's another very bullish thing to keep in mind. Days to cover sitting at almost 3. So that is good. It shows it's pretty hard for shorts to get out of their short positions. And you can see from the Fed rate monitor tool that nobody is even pricing in or expecting a 0.5% rate hike anymore. The odds of not seeing a rate hike for March 16th is 1.2% of investors. Think that. So virtually no chance of not seeing rate hike. That 25 basis point rate hike is at about 98.8%. And just a couple of days ago, we were at 20% chance of seeing a 50 basis point rate hike, which is a 0.5% rate hike March 16th. It looks like all of those fears are gone and out of the way. Literally, you can see right here, even yesterday, we had a 4.6% chance of seeing a 0.5% rate hike in March. So non-existent now. You're basically 100% pricing in that 0.25% rate hike. So that should be bullish as well. And I think it will be. And I think it'll boast really well for SoFi once some of those fears are out of the way. As far as tomorrow, we do have some very interesting things that are actually coming out. We do have, it says right here at 10 a.m., ISM non-manufacturing PMI for February. That is a 3-star volatility, so high volatility is expected. Fed Chair Powell testifying again, and that's at 10 a.m. as well. Another high expected volatility event. Services PMI, market composite PMI, those are 2 out of 3 stars, so moderate volatility expected. And then that's pretty much it. That's pretty much it as far as U.S. data that could stir things up and could make things a little bit more volatile. But it all comes down to Fed Chair Powell and what he says. I don't expect anything crazy. Oh, and as well as that, you do have initial jobless claims, and that comes out at 8:30, and we're expecting 226,000. So I think that's pretty much going to be bullish either way. There's a bullish case on both sides. You know, if that comes in low, then employment's good, the economy's doing good. If that comes in higher, then it might say, hey, Powell, we got to wait to start raising rates a little bit longer. So either way, I think it's going to be good. Tomorrow, I forecast it looks to be good. And I really can't find a bearish argument unless, like, Ukraine gets taken over tonight. That's not going to happen. If Fed Jerome Powell comes out and says something crazy we have not already heard today, that could also spook the markets tomorrow, but I think yet again that's very unlikely. As far as SoFi's actual technical analysis, let's go ahead and pull this up. So seeing a lot of support around $10 per share, like I've said multiple times, and we did close above this level right here, which is the 13-day moving average. So that is good. And we do have the 45-day moving average right here in orange. Found a little bit of resistance around that level, so we're still going to have to break out above that. That's at $12.80 per share. And then ultimately, we do have to break out past $14 per share. But the volume was really good today, and we're just going to have to wait and see how the volume does inevitably come and go. As far as the RSI, we are a little bit on the oversold side, a matter of fact, which that's kind of interesting considering we were still up on the day. The MACD is as well bullish. The yellow line is now above the blue line. So typically when this happens, it's a good time to buy some calls in the stock. But then again, we are living through times of volatility that we have not seen in the past 2 years. So nevertheless, thank you guys for watching. Get yourself some free stocks, links down below in the description to do so for that. Subscribe to the channel if you have not already. And if you guys like these deep dive breakdowns on everything that will affect your investment or make you money, hopefully makes you money, then hit that subscribe button, turn on that notification bell, all of that good stuff. Thank you guys for watching again, and I will see you in the next one.